None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It's not, I don't have my sidekick with me today. Mitch is off. He's on his way to Michigan right now. It's Friday again. It's amazing. I don't know if it feels this way to you guys, but I'm sure it does. Everybody always says how fast the week goes, but this week was a crazy week. Some market activity to drive it a little bit in the last couple of days. We're looking at the third day in a row in a direction, so that's certainly a different thing. My old buddy Vic Sperandio used to always say, expect more of the same until they show you something different, and they seem to be, at least for the last couple of days, be showing us something different. Today's show is going to be just like we usually do. No headsets on, because I'm usually talking to Mitch. That gets rid of the 20-second delay we have on the broadcast. So that way we can communicate real time and keep everything going. So it's nice to have things on my ears today. As far as things going on overnight, there's really not a lot, but there does seem to be a sentiment improvement. This morning, I think the only news that came out was the housing starts came out, and or actually the new home sales came out, and they were better than expected. We're still looking at, I don't have the exact number right in front of me here, but I think it was like 453,000. That's about maybe a third of what it used to be. It used to be well over 1.2 million. We have, almost 340 million people in this country, and all we can sell is 453,000 homes. So pretty dismal. I didn't look at the report to see if there were any components. I believe those were single family sales. So certainly better than it was, but certainly not real. As far as a real recovery in real estate, that's not what's happening. So I guess everybody's excited. Oh, and that it's interesting because I don't know if you remember, maybe you watched, what was his name, Paul Kangas on the nightly business report. I used to come home from the trading floor, and I'd catch that once in a while, just have it on, and you would see Paul going every minute or every 15 minutes a day. He had a story why the market moves, and I'm thinking, wait a minute, I was right there. I didn't know that happened. I didn't know that's what caused the market to happen. The housing report, they said everybody's enjoying and reacting to the lower interest rates, and there may be a quarter, an eighth, I don't know. It's really not moving. So it's just funny. I guess the talking heads and the news commentators need to have something to talk about, and they always have to have something happen, so there has to be a reason for it. A lot of times in markets, as we know, there's not necessarily what happens is what happens. So let's go ahead and get into some analysis this morning, and we're going to go over to the charts as usual. Good news is today I have improved the display environment. Last night I worked on this thing so we'd have a much better display, and get rid of that Windows 8 machine. What a piece of junk that is, huh? But anyway, it's nice to be back on Win 7 Pro and being able to know what to expect when you click on something, and hopefully this will make our experience a lot better. I'll mention this again, but we are planning on changing the time for Process Warriors. We have been having a lot of issues. We've been doing this at 3 o'clock New York time. I think it's the bandwidth at the firm that we use to stream. I think it's a very popular streaming service and very large, and I think they're getting bandwidth is getting hit, and we're getting knocked off all the time. So we're going to just do a show every day at 9 a.m. my time and noon Eastern time. It just seems to be, we have no glitches at this time of the day. It seems like everything is a problem, and most of the software, because it is live software that I'm using, it's always involved in bandwidth being part of the equation. So we're going to try that out, and nice thing is, even if you can't make it, it's okay, because you can stream it later whenever you have the opportunity, and we really don't mind or have any preference in whether we have live audience or streaming audience. It doesn't matter. We usually have a reasonable number of people hanging around on the live broadcast. But Fridays are Fridays, so there's a lot of things I want to talk about when it comes to the markets from the standpoint of ending a week and some of the elements that are out there that we're starting to look at. Of course, we're trading at 1199.11 at this very second. The high has been 99.27, so we're sitting here trading right at the highs of the day as we're taking a look at this, and almost at historical highs. The 1902.17 was the historical high on this market. So we'll go ahead and start to drill down a little bit and start to see what type of things that we can find here. As I continue dialogue both in commentary and on the Market Thunder shows, is there's an underlying bias to this market to the upside. It's not a very strong one, but it is what it is, and it continues to drive the markets higher. At some stage, a pattern like this could get very climactic, meaning that it could just finally break out, spike up, and then it'd be a very quick, I don't know how this party's going to end, but I do know this is one of the final segments of the markets. I just don't know where it ends yet, and we've been targeting for some time this second quarter as a potential high. It still looks like that's the case. So we'll go through some of the numbers here, and you'll see some improvement over from Wednesday when we were looking at this thing. And you'll see that, let me go ahead and just go to pure charts here for a few minutes so I can do some analysis. But the patterns that we're seeing here are continuing to unfold, and I just want to bring up a couple of these things from the standpoint of what's actually happening with the configuration. So the other day, I'm pointing over here to the ppms on the left hand side, the values there, 0.11, 0.05, and 0.06. Now those are not trend levels by any means, but they are improving, and if you look at the actual last ticks on the indicators, you will see all three are improving. And typically when all three are starting to break above their moving averages that they're on here, these first and second derivatives, you are about to see at least a surge in prices. Now all of these indicators, just talk technical for a little bit here, all of these indicators, I'm drawing the peak values, and I'm gonna show you where each one of these happened actually, and this will help me to put this story together. But through each one of these, they're shorter term elements. So ppm1 is tied to the 10 week, or this is the daily, so this is short term, 10-day moving average. ppm2 is 21, and ppm3 down at the bottom is the tied to the 40 period moving average. So it's looking at the rate of change or the percent change of the moving average, and then it's looking at first and second derivatives to determine turning points that are occurring in the markets. And the patterns that we're seeing unfold here is really typical. You're going to see, I'm going to put a couple more arrows, a lot of arrows here. Matter of fact, I am going to, I say I don't have the latest version of this software. I've updated the computer, but not the this piece of software kept asking me to do it, and I didn't do it. Now there's something on it, I need it. So, but anyway, that's okay. These last two arrows, I'll just kind of put an X through them so you can see them right now. Those two, each time you get these peaks in momentum, these indicators go flat. They're not supposed to. They're not like, if you've used any kind of technical analysis, they're not like relative strength. They're not like a stochastics indicator or anything like that. They are a pure measurement of percent change and looking at the first and second derivatives. And what this tells us is that I am going to clean this off and draw a couple of new lines here. But what it tells us that these last peaks that I was just showing you, these right here, just kind of draw up again where they came in at. There was way too much going on there. But these are points where the market was peaking out from a momentum standpoint, and then what happens is they get into a maintenance from a maintenance standpoint, they will go flat, like I've drawn the arrows through here. The next thing will happen if they start to break out again. I'm drawing some arrows on the PPMs on the far right at the bottom. Those start to show an increase in prices, and it starts to raise the probability of the market going up again. Now they're a long ways from setting up another one of these, like over here on the further to the left, when the market started to move out of the range again. But you can see each one of these. I'm going to show you where when these peaks came, where they came, even though they peaked out, the market went back, pulled back in for a little bit, and then went up again. That's sort of like the momentum kicking off that trend. So understanding trends is not just looking at how strong is something at a given time. It's how likely is this momentum going to stay, and what does it mean when it happens at different scenarios. And just a quick technical corner this morning, because I think it's important. It's important to understand this. So when you see the commentary and I say the probabilities of certain things happening, this is where all this is coming from. So I'm just trying to find my cursor here. So as we look at this, we see if I can blow this up a little bit, and we can see if we can get a better view. Yeah, here we go. You can see now that the view of the last 3 days, here's our 3 positive days. You see the indicators moving up, but you also see some, I've been talking about in commentary, the 1920 to 1930 range. That's the next Fibonacci cluster area that it's likely for the market likely to move up to. And I believe, if I did good, yes I did, I tried to get we've got some numbers here, and I'll show you exactly what these are. So when the high targets there are, high target 1 is 1904.74, which we have not breached yet. And then the next 2 targets, which are extremes, are 1920, 1930. And interesting enough, they're both 1920.93. I haven't seen that exact number pop up before, but those are the target zone for this next rally should it continue to break out. And we're trading right at this 1900 number, so they're trying to find a bagman or somebody to push it through on the upside here. Let's go ahead and look at the weekly graphs now, just to get a perspective there. And this is what's been really driving the commentary here. What's been driving the commentary is that these intermediate and longer term trends continue to be, the underlying trends continue to be positive. Like we've talked about many times, the VPM modeling process is around 60-40 right now, roughly. Anywhere from, I think the ETF, the global equity 4 right now is 50% invested, and the global, that I think it's exactly 50-50. And a lot of other strategies, all weather, things like that, are around the 60% level. So we're pretty conservative when it comes to where the markets are right now, and there seems to be some crazy misconception that what you want to do when the markets are going up and that they're all-time high, you want to own as much as you want to own. And I talked about this before back in the old trading, floor trading days. Our goal was, as the stock got, let's say it was an individual stock or even an index, as it got higher, the goal was to build a position from that viewpoint, and by the time it got to the high, not to own anything anymore, so you didn't have the rollover risk. And so VPM's been kind of taught to think like that, but we've also seen a lot of the sales that we've had in the last maybe 3 months have been long-term profits that we've talked about before, and we'll just kind of we've been taking these long-term profits and scaling back some exposure. And I don't know that we're going to explode out of here. We've talked a lot about on different elements from what we want to do as far as what if the market breaks out again. And VPM could buy back some of these symbols. It doesn't look like it right now. It doesn't look like a lot of these symbols, especially the big indexes, are ready to come back in. The Russell and technology and other areas, biotechs, have still been under a lot of pressure. The fact that they're bouncing off their lows and the Nasdaq's bouncing off the lows. The S&P has been the leader. And I remember a couple years ago at a conference, I thought that the large caps would end up to be the leaders. It just took like a year and a half longer than I thought for it to get there. But that's what we have right now for the first time probably in the last, well, certainly since the crisis, but even going back before then, the mid-cap, large-cap, mid-cap and small caps have led the way. And many of you that have known me for a long time know that I've been talking about usually when you're screening to actually have more of a $1 to $10 billion window, and that's kind of that small mid-cap market. It's a lower end mid-cap, but this large cap market is actually driving the scenario right now. It's driving all the trends. So let's go ahead and break into some of the details of this weekly pattern. And I'm not sure. Certainly, you can go back and watch some of these shows. I think these are probably, if you missed one and you want to catch up with the markets, they're worth watching. But if you're here live, there might be a couple things that we're talking about here that would be helpful. But when I look at this pattern here, what we're looking at here is all three averages advancing. You've got almost a perfect symmetrical parallel line going up here, and it's just trading up and down in that range. And then look at this, what's happened. 0.31 ppm, 0.15, 0.34. This 0.15 here, I just drew a circle around. That is the only indicator, which is the 21-week moving average indicator, that is not in a trend. Meanwhile, this ppm3 is very similar to the 200-day moving average. It's at 0.34, way into the trend mode. You can't sit here and say you're a trend follower, and from a VPM viewpoint and from my viewpoint of 30-some years of doing this, this particular methodology. I started back in 1982, actually, so it's actually over 30 years, is you can't ignore what's going on here. And this is why in commentary maybe it seems like, I don't know, a continuing saga, but it is. When you get into these elongated trends, it is anyone's guess when they end, so you have to wait and respond to the changes that happen. And every time we have gotten down to a point where it looks like something might happen, guess what? It didn't. And that's the point of all of this stuff. So same thing like we talked about on these indicators here. This one's actually probably a little more interesting, but these could, just because they're long term. But I'm drawing up arrows here where these peak values came in, and you can see going back after the 2011 deal here. I'm just going to draw in. You start to get this stair stepping of this trend, and this stair step is exactly it's kind of contracting, and I've been contemplating, I guess, one of the theories, and I don't know how many of you have any reference to like an Elliott wave theory, but this thing I'm taking the time to draw in. This pattern is really pretty typical of a trend pattern, but this last section here, which I'll draw a circle around where the tight area is, that is very potentially what's called a diagonal fifth. And if that's the case, these things never end pretty. And these little stair steps, if you notice down at the beginning of the trend, I'm drawing a bigger circle around that. Those are larger trends expanding, and then what we get at the end of these trends is these contracting little sawtooth-like things that happen. And from a pure technical viewpoint, the problem is you don't know when they end. But from a pure technical viewpoint, this is exactly what how these things do set up a final end. So when we're looking at this weekly graph, one of the things that I think is reasonable to note anyway is that these peak values on these indicators were setting the tone for this bigger trend up, okay? And now what you've seen since then is there's just been, matter of fact, I'm going to make my my marker a little wider because it's so. But right here, I'm putting arrows through this. They're just flat, and what they're doing, and this is once again understanding what a trend looks like, is that it is actually it's maintaining a certain amount of momentum. It doesn't have to spike up. It doesn't get overbought or oversold ever, and that's why you don't hear me, very, very seldom will you ever hear me talk about an overbought or oversold market. I'm not sure there is such thing. That's a reason for someone that missed the market to talk about why they're not in it. People are very good about that. So I'm just, but anyway, this is the type of things that you get here, and then we'll go into last but not least the super duper slow-mo, which is the monthly graph here. And you can see this is even more pronounced. The momentum numbers actually have slightly improved, but I want to bring something up because I realized on Wednesday I didn't bring this up here, but I will now. Talked before about how these three moving averages are expanded out. One of the things that is important to note, we got ppm1 at 1.20. We got ppm2 at 1.43, and then ppm3 at 1.03. So what's happening, see if I can I'm going to draw this. I'm not sure how good I'm going to do drawing with a mouse, but this ppm4 is starting to lose momentum. Just it's going slower than the other two. ppm2 is going the fastest, and ppm1 is starting to roll over. And what happens ultimately, I'm not sure I'm doing a very good job, but these averages start to narrow just like they did, let me get an arrow, just like they did over here at the 2007-08 top, and they will do the same thing again over here. And ultimately, when the market gets going, starts to roll over, then you'll see a crossover of these two averages, and then ultimately this 40. I'm doing a fairly good job. This is what happens here, and then you start to get this whole topping area over here. that ends up to be the top of the market. So somewhere you top out here, and then that was great. Somewhere you top out right there, and you can. I lost my whiteboard for a minute. Sorry about that. You top out here, and you get a pattern like this. And what we don't know is at what level do we come back to. This is the 2010 highs. That's the next real big support. The other support is, let's see here. The other support there is actually right at the 10 period moving average. So bear with me, my computer's making some really strange noise. So the point of all this is that this thing is in the process of topping out. The 21 is coming, will roll up to the top. But once again, as I've talked, this is the super slow motion chart, and when you're doing super slow motion, it takes time, and these monthly graphs will take time. As I've talked about, maybe the top is at this point in time right now, maybe in the second quarter, maybe May, maybe sell in May and go away. So far, that hasn't worked. It didn't work last year. But the bottom line is as this market starts to top out, then you're going to have some pretty interesting patterns start to set up here. And the market could spike out on a monthly graph and then just go sideways. And all of this thing I'm talking about here, all this action from the momentum and the moving averages is going to unfold, and ultimately that will be the top of this market. It can continue, but I'm seeing signs here, and I've been talking about this, but because they're talking about paint drying here, it's happening very slowly. So we'll go and but that carries us through the whole market and what's changed here. So let's do this, and we'll go back to charts here. Let's take a look real quick at the shorter term window. And for some reason my toolbar is not floating like it's supposed to, so I will go over here and do this. We've looked at these charts before, and these are the charts that are coming into play here. This is the hourly graph, and you can see all the veil, I call it, is underneath the markets right now, suggesting that this uptrend that began. Now this is an hourly 24-hour futures chart that began a few days ago, is still very much intact, and it's not. Matter of fact, you can see all at the end here that these moving averages are turned up, so they are still in some phase, possibly like they are over here where my cursor is pointing right now. That could be the place where you're actually seeing this market, I guess, where we're at right now. Let me just put a whiteboard up, make sure you see that. So this area where this bar here is breaking out would be similar to this bar breaking out, and the moving averages that are there, you can see, are also spread out similar. So that would tell us we're 2 or 3 days off. I think in the commentary I said we'll probably hit, if we're going to go to this 1920, 1930 level, we're probably going to hit that within the next 5 to 8 sessions. I think that's pretty much where we're going to be. The bottom line is that you really can't get I guess much more out of this market than what we've already seen from the standpoint of what the hourly charts are doing and the short-term charts. You'll see that recently, though, that over here we had a cycle come in, but it wasn't a major one. Right here at the low, I've been talking about, I missed that one a little bit, but each one of these cycles are about 23 hours. And it's interesting that they tend to come in somewhere right in this range. You'll see these little clusters here, and these are a rate of change of volume. So it's one of the few areas on an intraday basis I'm looking at volume, and you can see that when you get these spikes, but most importantly, the big lows come. I'm drawing down at the very bottom indicator when these big spikes come from, and this is a swing index, which is looking at the amount of momentum in the moving averages. It's not really measuring the market itself. So the swing index gets down to these extremes. That's usually the bottom of this pattern. The same typically when you get up here at this, you can see in this zone here was where it was spiking up to a large degree. So they're pretty close to getting these highs and lows in play from the standpoint of what's going on in the short-term cycles. So what's happening and what this means to analysis from a daily standpoint, and tying this all down, I've talked about it quite a few times now in this show, is looking at it from a top down. So we started at the super slow-mo at the monthly, the weekly, and then the daily, and then the hourly. And from some short-term trading that I do, a lot of times I will look at the 5-minute graph, which I'll bring up right now. So when we look at the 5-minute graph, you're going to see much shorter cycles, obviously, because this is a lot of bars. What is that? 12 bars per hour. So you're looking at quite a few bars. But you can see this last little move up. It looks similar in its formation. It also looks similar to the pattern that's off to the left over here, because you can see the patterns that are unfolding right here. This is where I'm talking about here and here. So when the market's expanding, the moving averages, or this veil, these are exponential moving averages, actually move and start to spread out and show that trend's in place. And each one of these lines inside of here usually suggests that the market's not able to get through there. So this is how I use these to kind of get a good idea for what's going to happen when I'm writing commentary and day-to-day movement. And this next, when I'm doing the 3 and 5 and 8 day windows, there's two things that I'm doing, is doing that, plus I'm doing the shorter term stuff and doing some bar counting, if you will, and looking at cycles on a short term basis. And from a standpoint of ultra short term, you can see, I want to show you this because this is interesting from the standpoint that here we are trading like 3 ticks off the highs right now, and this is the 1-minute graph. So this is the futures, and these are, sometimes you don't know whether the tail's wagging the dog or the dog's wagging the tail, but you can see it's interesting. This 197.25 on the futures is actually targeted as the value point of the day. So if it gets through that, which we're trying to trade through it right now, you're going to see a little surge in prices, which is going to put us and push us over the 1900 level. So we're not going to sit here and watch this for very long, but I think this is what's going on in the markets right now. And there seems to be, the bidders a little bigger than the sellers right now. It's bid at 75, offered at even, and 25 is the high of the day. So we're just 1 tick off of that on an offer side. So we'll see. It looks like to me they're going to try to run this thing through. Very seldom do they get this thing up here and don't go fishing for stops. And certainly over 1900, everybody that's playing the 1900 resistance, that's going to be the play there. So let's go back to the main graphs here, and let's take a look at, let's go through the treasuries and some other elements first. Matter of fact, I've got it here, so why don't I stick it up here. This is the Japanese yen. This is actually the futures, and I can put up here the let's see, I believe it's FXY is the ETF for the yen. I've been suggesting that this market is going to move out of here. It's pretty flat right now, but we are seeing some increase on PPM2 we're still seeing the short term and intermediate and longer term on this chart. This is a weekly graph, and we're seeing that continue to not really indicate that this thing is breaking out, but the pattern is there for this thing to go, and it's there for it to go in a big way. So certainly a good position for your individual accounts for yourself. We'll go over there and we'll take a look at the treasuries. Matter of fact, I'm going to just size this so it'll fit in the software a little better. And we'll take a look we'll bounce through the treasuries, which is interesting that the 10-year is back down today. We're at 253.6. So this is hovering around this 250 range. We hit the other day, let me just put a number up here so I can see it, so you all can see it. But we hit the other day, I believe it was, 247.3. So that's been the low of this pattern. I talked about several weeks ago that I thought we could see 245. That may have been it, and it's just a matter of where this market bottoms, but I think it's getting pretty close, although there's still some downward pressure on this, but they're still pretty close to, I guess, what it looks like is a bottoming pattern. I mean, we can go shorter term on this thing, take a quick glance, but you can see we're kind of stair-stepping down, and we're getting those tight stair steps, like I was talking about the inverse on the S&P. So this suggests to me that things are changing. Just the pattern's changing. They're not the wider, bigger channels that you see. So the tight channel usually tells you at least there's going to be maybe a short-term pop in rates. And I talked about this the other day, possibly going toward the 260. I think it was 265 to 268, a high of 272 on yields. And this type of pop in the bond market is not going to make any type of I guess, consider it. It's not going to cause anything change in the stock market from the standpoint of what's going on. It's not going to trigger some selling. In fact, I think it'll be supportive if rates go up a little bit. I don't think until the magic number that the entire world is watching really is the 3.03, which was the highs that we made several months ago, and that's, somewhere we get up maybe 285, 290, you might see some nervous people. Maybe there's some effect in the stock market, but for right now, I don't really see that happening very much at that time. So one of the things that we always try to do here, and we'll come back live for a minute, and I'm gonna go through some stocks that I've got picked here. I wish I had a better way to get some information from you guys. I don't know if we've got our eyeball on. Mitch is out of town. He's using my extra eyes and has some pretty good ideas on some of the stocks. And I'm going to go through some stocks here and just talk about some of the items that we are having. I think some of the stocks that we've talked about before. One that we haven't reviewed for a while. We're going to start with Qualcomm, and that's QCOM, and we're going to take a look at that because this stock has been in a really robust trend for several months, and it's interesting because it's actually acting a lot like it's almost like perfectly aligned with how the S&P is acting right now. And I was looking through this the other day, and I think there's some elements here that we can probably talk about both in the trend, and there's some things that we're still seeing in this trend that I think is pretty interesting from the standpoint of what's going on here. So let's go ahead and get the whiteboard up here, and a couple things interesting, just starting with the PPMs, 0.62, 0.36, 0.43, all three of those are current trends from an uptrend, all positive numbers. You'll notice that the PPM1 is 0.62, PPM 2 is 0.36. And the pattern that I was talking about a minute ago, looking at the S&P 500, is that normally when you're starting getting close to the top, the 10-period moving average will, because it's the shortest term, will start to lose some momentum, and it will be traveling at a slower rate. So right now it's traveling at 0.62%, where the PPM2 is traveling 0.36. So this 10-period moving average is still expanding away from the 21, which tells me that this stock is still pretty good as far as that goes. Let's blow this up and take a little closer look at it, and this last little trend here. And let me see if I can crunch it just a little bit. So a couple things that you see happening. We are hovering right along this 10-period moving average here. You can see my cursor moving along that average. We're staying right on that average, and that is a really that is a pretty good sign, because we're 0.62 I'm moving this over here, and I'm going to bring up the whiteboard so I can just point out this. At 0.62, we have right over here 0.62. That means this 10-period moving average is advancing at a little bit better than 0.5% per week. And the probability of the market closing below that level is below that, the value of this 10, which right now is 64.30, is not very likely. The stock's trading 70 and change. I can get my my box right in the way, but it looks like it's 70.82. I'll look at the exact price here in a minute. But that is hovering along that line. Notice that it spiked under a few times here and came right back. It did not close below this line. And look at these numbers a little closer here in a second. Let's take a look at them now. But this line here may have barely closed under. The 10-period moving average is 77.54. The low was 77.60, or the close was 77.61. So literally 5 pennies difference, but it did not close. The low was 76.77, so it spiked under it, but then came and closed just right at it to a few pennies above it. And the same thing here, we saw a spike under it again. The average was 77.87, and the low was 77.37, with the close at 78.99. So this is how, when you're looking at a minor trend like this, or a trend like this, not a minor trend, but a weekly intermediate trend, this is how this thing is going to work. There are some Fibonacci numbers that are right here where I'm kind of circling my cursor around. There are some numbers there that look like we've got some possibilities for the stock to go to about, let's see here real quick, it's 80, I guess 82 to 80, 83.50. So there's some upside. The high today 79.99, and it's so it's just kind of hovering around there as far as this goes. But this stock has a pretty good probability, I would think, to break out of this pattern and do one more level up, maybe one more up, and then have all of these averages come in and start to consolidate. And in fact, I'm going to move this chart over just a little bit. Let's move that just a touch over. You'll see where it says exit long here, the same thing that I've been talking about for a while happens, is where the moving averages start to collide ultimately. And in this case, it broke below, traded up, and you stair step down a little bit before it repurchased over here after that trend didn't follow through to the downside. But this stock continues to be on the current level pretty strong. And if you go to the next level and you go to the monthly chart, you'll see this stock is starting to move its way back. Let me spread this out just a touch. we're starting to move back a little ways away, but start to get back toward the all-time, crazy high of the dot-com boom, which this was part of. It got up to a high of 100. So we're 20% off of that, but it's working its way that way. I don't know how far it will get, but it's most of the stocks have not done that. Like a good example, I think we had it up the other day. I'll just bounce over to Cisco real quick. But look at Cisco on the same level. This stock has not done anything. It has not been able to get any traction, not be able to do anything of the sort like where Qualcomm has done a pretty good job. Next, we're going to go through one of the favorite stocks, which is Apple. And get the right symbol up there. Let's back up a little bit before we look at the super slow motion and go to the weekly graphs. VPM continues to be long this stock, and it's moving up. Actually, it's not moving up as crazy as it did in some of these previous moves, but I want you to look at what's happening here from a trend level, and this is pretty substantial. So I know this is a favorite stock. I saw somebody on CNBC one day, and they were talking about how many stocks that are on the New York Stock Exchange, or how many good stocks are out there, and it comes down to it. There's Apple and 2 other stocks that people watch. It's definitely a bellwether. It's become quite the the stock in itself from a capitalization standpoint. It's not quite at the top of the heap, but it's pretty close again. And we can talk a little bit about how this chart is going to continue to evolve, but I think it's important to understand that there is a substantial trend. So as we look at the that's unfolded here, and it's continuing to unfold. So we'll take a look at the same things we talk about all the time. What are the PPMs doing? PPM 153, 0.43, 0.51. What's happening here? The 10-period moving average is expanding. It's at nearly, actually it is. It's 3 times as fast as the 21 and 3 times as fast as the 40. So this is exactly what you want to see. I'm going to point out this previous trend when the moving averages spread out. And when they spread out, that's when the trend is expanding. If you notice on this previous trend, we rode right along the 21 period moving average, and ultimately when all of these indicators started to fail over here, BPM exited, and we had a nice trade from here to here as far as the profit goes there. So the point is that was the previous trend. So when we look at the current trend, what's happening, you see these averages are exploding, the market's expanding out of here. There isn't a current longer term objective, Fibonacci objective, that's out there right now. So there's nothing really to pull off of as far as as any targets at the moment. I'm going to look at a couple other charts and see if we can get some short term or maybe longer term Fibonacci targets. But for right now, one of the things we could look at is what's likely to happen in this stock. We'll go in and bring up we'll bring up the I'll draw some lines, some price retracement lines. So we're going to go back to the old highs here and then to the lows of this pattern. So we are getting very closely to the top end of the Fibonacci sequence, and see, I can't read that, so I will get it. I'm going to do a number a different way there for you real quick. Okay, so let's try that again. Let's just use the pure numbers. That way I can see what they are. And when I do the price calculator, we'll get an actual number sequence. So I wanted to see what that upper sequence is right there. So that number is actually we have broken above this the 66% line, 594.30. We'll round it up, and this suggests to me that there's about a right now a 40 to 60% probability, and give it a range because of what's happening, that we are going to retest the all-time high. So don't give up on this stock and get thinking that you know where the top is and it's getting a little frothy, because it doesn't appear that to be the case. Yes, they've got iPhone 6 coming out in a few months, in August and September, I think, are the targets, and who knows if that will be a burst. But they're still getting traction in China and some other things that are going on. So we are this stock is looking very well. Let's take a look and see if we can find any objectives here that might be of interest. There's a couple patterns I'm going to talk about here just real quickly, and we're talking long-term outlook here, talking about some of the things that we've talked in this show a lot. You get all these little patterns. I'm just going to draw these out here real quick, and this was the big one right here, and then you get the big elongated move. And what appears to be happening here is another move. That this is all part of the bigger trend that I just drew in of Apple. And notice it hovered right along. Now this is the monthly moving average. So the 40-month moving average was right where this market stopped. I remember at least talking before we had this show and this platform to be able to discuss these things, that the longer term trend in Apple is long from over. And then when this thing declined all the way from 700 down to 400 and change, it came right down to major support, and that's where this was found off these long-term charts. And now we've seen VPM come back in, buy it, and now we're starting to see getting some pretty good traction on as far as what's going on with this stock here. And we'll probably have time for one more stock today, and let's go. We'll go to Google. So let's see here. What did I do here? They changed their symbol. Hey Jay, do you know the symbol? If you could, Skype it to me. Yeah, I'm trying to. What did they do? Is this it? Yes, thanks. I finally figured it out. I know they just changed that symbol. I could not. Mitch was my backstop there. But so here, let's go off and go back to the weekly chart on this, and you can see a decent trade here by VPM. I'm not sure that this is the right one. So if this is, I think it's got. Let me take a look and see what strategy we have here. It is on 3-2 right now. I'm going to take and flop that off. One of the unique things with this TradeStation platform is that you can actually, I'm doing one at a time, but you can actually do two models at the same time. So it's kind of interesting. So you can actually put 1, 2, 3, 2 and have multiple signals. And we're probably going to be around June 15th, but we are going to have a release of the logic that will go into TradeStation and ultimately when that happens, then we'll be doing yet another show just on training on how to use this, because it's pretty powerful. We're finding I'm working on a couple things to be able to export ideas and concepts out of here and signals that come out into VDOS and some other ideas. So we've got several projects working that I'm pretty excited about. As the markets get more dynamic, it appears that there's more activity necessary, and we can actually handle it at that point. Let's see if the same thing with Google here. I just want to go through this trend. You get these stair-stepping mode here, and now what's happening here is you've got the moving average, the 10-period moving average is minus 4.8, flat at 0.1 on 21, and positive 6.3. So when I was talking about earlier, it's the same thing here like in Apple. When it declined, this went right to the 40-period moving average. That's right where we are. It's at 0.63. Market's not going through this level. I mean, you could, my old nickname on the trading floor was Dr. Given, and I would tell you it's a given that you could buy this and trade off of this. Of course, it's already bounced a lot, so maybe you could say, well, it's hindsight, but it's not. If we'd have been talking about this stock the other day, 2 months ago, I would have been screaming that this is the buy point from that standpoint. And you could actually go to, depending on the type of things you're doing, you can actually go to like a VPM 1.2 daily or something. When you see longer term opportunity coming up, you can go into a shorter term chart to get in faster. So like I said, I've been nicknaming the monthly charts as super slow motion, and then we've got the intermediate, which is slow motion, and then we got fast is daily and the hourly graphs. But you can see what's likely to happen here is these moving averages are bottom. You get some kind of pattern like this, and the market starts to this stock goes up again. If that's the case, and maybe it doesn't make the new high, but it retests it, and then maybe there's more downside or it rolls over. But that's probably some of the things that we've talked about today, looking at Apple, looking at Google, looking at some of these stocks that are really driving 2014. You know, we're no longer being driven by industrial stocks. It's more the technologies and other stocks. Then, you know, it really is, I guess, these things are telling us that the market's really getting pretty close to being done from that standpoint. So we've got just a few minutes left in the show. I'm going to come back live here. And next week, like I said, we're going to do Process Warriors at noon Eastern time, just like we've been doing the Market Thunder. So every day at noon, you got nothing to do. You want to, if you're on the East Coast, want to have lunch with us, tune in, stream it. We're going to continue to keep this content flowing the best that we can. And I really think that next week, I want to go through and start ripping through some of these biotech companies and some of the other stuff. I want to focus next week on some of these companies that have been trashed, to see if there's things like what we were just talking about on Google, if those things don't exist out there from the standpoint of opportunities for those markets to get, you know, that are going to bottom at key support levels with long-term, you know, I guess long-term trends still in place. And that's really, I think as we go forward over the next couple years, depending on if this market, when it rolls over, not if, I guess at some stage it will roll over, but when that occurs, it's always going to be, I think it's going to get more and more about to do an extra good job for clients. It's going to be more about stock selection, picking stocks, and being involved in more individual stocks. It may not be as exciting to be in the indexing world. There's a lot of certainly appropriate places to use indexes for certain types of clients. When you're trying to build true alpha, then that's the case. You're not going to do it much through indexing mutual funds and ETFs. Maybe, I guess, if you're aggressive and you're doing these ETFs that have multiple they're 2 times, 3 times levered, but I don't think that's a very good way to go. And I know a lot of firms have actually don't allow some of those 2 and 3 times, and I don't blame them because you can get hurt playing with those things. So anyway, listen, folks, it's Memorial Day weekend. At the beginning of the show, I had U.S. flag, honor our vets. We wouldn't be doing this and everything we do every day without them. So with that, have a great Memorial Day. Be safe, and we will see you. Actually, we won't see you on Tuesday or Monday, will we? Because it's a long weekend. So we'll be emailing you the new schedule for next week. We'll probably just do it just like we always do. Where, matter of fact, I want to do Market Thunder on Tuesday, and then we'll just go through the week, and we'll probably we'll get you a schedule out and see exactly what we're doing. Anyway, folks, have a wonderful holiday weekend and enjoy. Thanks again for showing up. We really appreciate it.